Hi guys, so my name's Ella. Welcome. I am a financial advisor and an insurance specialist. So for the next sort of 30 minutes, I'm basically just going to give you a workshop as to understand, how personal protection is really, really important for us as women and how easily it is to implement. So I will share with you guys a very quick presentation. Okay, so essentially, what we want to do is, of course, protect the things that we love and that we value. And that includes not only the people around you, but also yourself. So I'll just give you guys a bit of background about myself. I'm Ella, I'm a financial advisor, I'm an insurance specialist, okay? So that's what I specialize in. I am FCA regulated, so it means that all of the advice and protection that I put in place for both personal individuals and businesses is all FCA regulated. I work with a number of different providers. I'm a property owner as well as a mother. So it just means that, myself as an advisor can be a little bit more relatable than your average person because I've got a bit more experience. And of course, I'm an expert in protecting the things that you love. Okay, so I'll just begin with the sort of beginning topics and give you guys an intro. Of course, the number one, the most common one now is life insurance, okay? And this essentially protects not only yourself, but your families and helps to mitigate any financial loss. And this is the big sort of misconception that a lot of people have when putting in place, things like life insurance is, why is it necessary? Now, of course, if you have any form of debt, it's necessary. A prime example of a debt is something like a mortgage payment, not student loan. We don't need to worry about that, but definitely like a mortgage payment, significant for car finance. It might be significant loans for a business or for you to, have got a new car or got the roof done, whatever it may be. Another example, of course, is funeral costs. Now, this is where it becomes applicable to everyone because unfortunately we will all pass away at some point. And in order for us to be laid to rest properly, there is a funeral expense, okay? And then the next one, of course, is childcare costs. There are a number of reasons, but these are the most common. By having any form of life insurance in place, it just means that you are financially responsible for yourself and you're ensuring there is no financial loss for loved ones around you in the event of you passing. You're not having to worry about the loved ones having to fork out the funeral bill. The average cost these days as well for funerals is round about 15,000, just to kind of give you guys an estimate as what we're looking at the moment. Those who are great and are in a position to transfer over assets to loved ones and children, of course, there is the unfortunate inheritance tax. Now, I know there's discussions about raising it, decreasing it, etc., increasing the capital gains tax, but inheritance tax is definitely something that we are not in a position to avoid. And life insurance can actually be a great way to mitigate that for loved ones. God forbid you've worked so hard, you've worked incredibly hard to acquire your home, your properties that you now want to pass over, and then your poor loved ones have to pay 40% inheritance tax just for something that's literally been gifted to them. But by having life insurance in place, again, it's a great way to mitigate that. And also, of course, if you pass away unexpectedly, so before it is genuinely our time to pass, either through sickness or an accident, whatever it may be, what does life look like for those who you are leaving behind? Of course, if you've got children, we need to ensure there is enough income, there is enough finances to allow them to continue to go to school, to continue to buy school uniform, to continue to do all of those sorts of things. You may not have children, but you may have people financially dependent on you. That can, of course, be parents, siblings. What will life look like for them the minute your income is no longer in the equation? So, of course, incredibly affordable, always tailor to your needs and circumstances. But life insurance is obviously a great product to sort of mitigate against the following. A common misconception, is it just for people who have kids? It absolutely isn't. As I said before, everyone, of course, will incur, or you won't, but loved ones will incur a funeral bill in the event of you passing. So it's not just for those who have kids. Of course, mortgage protection, which I briefly touched on, is a policy that works on a decreasing term. Really, really affordable. I get a lot of questions where people are worried about creating an investment property portfolio, and they're worried about putting cover in place and then having to increase this. Any cover that is in relation to a mortgage is usually the most affordable of them all. And I'm talking less than £10 a month. You can then have your life insurance paid out as an income, not the traditional lump sum that most of us see sort of advertised on the TV. This is something that only an FCA regulated advisor can do for you, but it's a great way at sort of ensuring that loved ones aren't going to blow 100,000, 200,000 on a Ferrari or, you know, a cruise around the world. And you can ensure that they've got a steady monthly income coming in for the foreseeable future until they're in a position to be financially dependent on their own. And then, of course, like I was saying, paid as a lump sum, what is it usually for? Paid as an income, what is it usually for? Now, what determines the best way to have the lump sum or level income paid out is your needs and circumstances. And this is why it's really, really beneficial to have a conversation with an advisor, because, of course, what we do is we understand what is best for you. We look at your needs, we look at your circumstances, we look at your income, and we tailor your cover specifically to that. So then that way the cover matches your current lifestyle and also matches what your potential lifestyle may look like in the event of sickness or, of course, in the event of death. Okay, guys, so moving on to the next one, which isn't as popular or as common as life insurance in terms of what people take up when they do it by themselves. And it's purely because people just don't know as much about it. And that is critical illness cover. My favorite terminology for it is compensation. I like to call it compensation because it literally is a lump sum of money that is tax-free that you can use as you see fit. So great things that we can use critical illness for in the event of unfortunately being diagnosed with a critical illness and receiving this lump sum payout, of course, is home alterations. What we have to do is we have to set the scene. We have to set the scenario. You've been really unfortunate and you've been diagnosed with something. And this can be a whole host of things that are incredibly common, such as cancer, but it can also be quite rare, such as a permanent disability as a result of an accident. What does life look like now that you've been diagnosed? We want to continue with the same quality of life as much as possible. So by being able to use this lump sum, this compensation, as I refer to, it means that you may be able to make some home alterations, home improvements that mean that life can still be as comfortable as it was before. If you have significant bills, so for example, paying your rent or paying your mortgage, it means that you're in a position to cover these comfortably where you may be taking time off work because, of course, you're at the moment sick. Of course, any debts that are sort of leaving a large hole in your bank account, it can be a great way to clear these debts to then, of course, free up some more disposable income for yourself. And then one of the most important ones that is overlooked so much is further medical treatment. Again, setting the scene, we've unfortunately been diagnosed with this horrible condition, whatever it may be, even something that is at stage 1 that we can make a full cure, full recovery from, fully cured. You may want to invest in further medical treatment, again, to sort of expedite the process in your recovery, or to just improve the quality of your treatment. And by receiving a large lump sum, again, that's tax-free, that's a great way to do that, where you're not as reliant on the NHS and can kind of take your own treatment and recovery into your own hands. So a great common question is it necessary, of course, where we have universal credit? Now, the standard threshold, the last time I looked, was around about £312 a month for someone in the event that they need to claim universal credit. So this is taking into the equation that you've been working before, you wasn't necessarily claiming benefits, and now you found yourself in a scenario where you need government assistance. I know, of course, they've recently increased it due to COVID, but that at the moment is kind of like the base threshold. £312 isn't doing anything. Let's be honest, you know, our lifestyles don't usually sort of warrant only £312 a month in being able to be comfortable every month. So of course, with a critical illness policy, it can cover those everyday money worries. How does it do that? If you speak to an FCA regulated advisor like myself, the great way that we tailor a critical illness policy to yourself is to base it around your income. So for example, if someone is taking home on an annual basis, 30,000, what I like to do is use that as a guide. So for example, instead of it just being 30,000, I may times it by 2 or 3. And that gives us a lump sum of £60,000 or £90,000 that is available to you in the event of diagnosis of a critical illness. Now, of course, what that means is, in the event that you need to be able to comfortably support yourself because you need to take time off work, you can do. How long? Well, you can certainly do so for at least 2 or 3 years, because of course it's tax-free, and you can comfortably cover every single bill without ever having to worry about going back to work within that period of time, because the lump sum of money is going to comfortably support you. How do we know it's going to comfortably support you? Well, if you're earning a salary, then of course, chances are you're living within those means of what your salary pays you each month. So therefore, of course, the critical illness cover matching that salary is of course then going to match your current lifestyle. If you have savings, what do we want our savings to do? The initial reason you saved in the first place may be to buy a property, maybe to get a new car, maybe to pay for further education. It may be for a whole host of things. Now, of course, by having a critical illness policy in place, it actually protects those savings. You know, you've worked incredibly hard to put 20, 30,000 pounds in the bank. You now need to take significant time off work, or you're just not in a position to earn as you was beforehand. Or of course you want to pay for further medical treatment, and you've sourced, you know, this amazing consultant, as I said, can expedite your recovery, and you now have to use that 20 or 30,000 pounds that you've got in the bank. And then of course, once it's paid for, absolutely amazing. We've now got our health back. We're on the road to recovery, but we're now also starting at zero in regards to all of that hard work that we've put in place. So your critical illness policy actually protects your savings and avoids you going further into debt. So just a very, very quick case study to kind of put this into perspective. Excuse me, 30-year-old woman, she's single and works in a bar, rents with her best friend in London, was actually in a car accident, so not necessarily diagnosed with your common illnesses such as cancer or heart attack, stroke, all those sorts of nasty things. She was actually in a car accident but broke her pelvis and now needs rehabilitation because the consultants have confirmed she may be permanently disabled if she doesn't receive this treatment. She now also needs some home adjustments for her bathroom because she currently has a walk-in shower. She doesn't have a bath. And so what she's now got is a lump sum payout on her policy that now allows her to make those home improvements, comfortably support her for the 10 months that she's not working, and allow her to return to work when she sees fit. Okay, so guys, this one is my favorite, income protection. It is the most important out of all of them. Because why? There is more cover available to us whilst we are alive than there is in death. I know life insurance is incredibly necessary. It absolutely is. It's a great way for you to be financially responsible for yourself. Critical illness cover, of course, that kind of is a long-term thing. It's a case of saying, I'm fantastic, well, healthy as of today, but my health may deteriorate in the next 15 or 20 years. So I've got a critical illness policy to help mitigate any financial loss if that happens. But an income protection is for now. We get up and we go to work every single day. I know that's a bit different at the moment because many of us are working from home. But bottom line is every day we earn an income, those of us who are in a position to. And it's actually far more common that you will be signed off work sick than you will either die or be diagnosed with a critical illness. And 80% of us at least lose sleep when worrying about bills. So it shows that significantly mental health and our finances go hand in hand. More of us, now that we're in a position to recognize as well, are being signed off as a result of our mental health. And so by having an income protection policy in place, it means we can continue to receive an income. It simply means that whatever you may have been diagnosed with or signed off work for, literally whatever that may be, the GP has said you are not fit for work at the moment, that justifies a payout on your policy. So of course, it can continue to cover those necessary expenditures every single month for the next 2 or 3 months that you may be off work, allowing you to take the genuine time that you need to actually recover. How many times have we been sick and we fought through it because we need to earn an income? We don't want to take the time off. We don't actually get sick pay at work. We only get statutory sick, which at the moment is £95 a week. Again, not a significant amount. So by having an income protection policy in place, it covers up to between 65 and 70% of your salary, depending on the provider. And it just means, again, that you can receive an income. Why does it cover 65 to 70%? Usually 65% of your income is spent towards necessary bills and 35% is your disposable income. So from a provider's perspective, they're not giving you the full 100% to mean that you're going to be reliant on it forever, but they are giving you a significant amount that should comfortably protect your household bills. You can claim multiple times on an income protection policy. So to set the scenario, you needed to take time off work for 3 months because you broke your leg. You went back to work for 6, and then unfortunately your mental health deteriorated and you needed to be off work for 2. You then went back to work for 2 years, and then unfortunately you now broke your elbow. And now you needed to take 4 months off work, for instance. You can claim multiple times on your policy with no increase in your premiums, not like car insurance. Each time you claim, the policy increases. But of course, multiple times on your policy, taking off the necessary time that you need to recover. Again, as I was saying as well, this is the number one policy because it protects all of our hard work. How many of us are rooting for sinking funds, different pots for different things, the holiday, the girls' hen do, the this, the that, the birthday party? How many of us are really trying our hardest to save? You know, we're managing how much coffee we're buying in the morning. We've now got savings in the bank. We're trying to buy something, property, car, whatever that may be. Or we may have children, and of course we want to put them in school and want to have a significant amount of cash flow behind us for those expenses. Or of course we're trying to clear debt. Your income protection policy is the one that secures all of that hard work, because it means that if you do need to take a couple of months of work, you're not dipping into all of those necessary funds that you set up for yourself. Okay, so that's why I say it is the most important. Women, how many of us are striving to become independent, entrepreneurial? So whether you are employed or self-employed, this is a great policy because it also means that you're not reliant on anyone as well. And, you know, of course, we're not trying to be sick for a long period of time. What we want to do is we want to get back on our feet. We want to get out there and we want to continue earning. We want to continue with that side hustle that's then going to turn into a long-term project. We want to continue, you know, trying to rise up the ranks in the company that we've already been, you know, working in for the last 3 years and are, you know, going for management for that instance. But we're worried about the time that we may take off and how it might affect us. How will we be able to afford the bills? How will we be able to continue to clear that debt? How will I continue to be able to save for what it is that I need? Again, the income protection policy is the one that protects all of that. If you have something in place with work, fantastic, okay? You may not necessarily need an income protection policy separately, but the one that you have at work may not be comprehensive. So always review it and of course still have a conversation with an advisor. If you have life or critical illness cover with work, you still absolutely need cover independently, because as our new generation knows, we tend to jump from role to role and are not in the role for as long as maybe our parents or grandparents were. Even 10 years, for example, we can't guarantee that we're going to be in one specific company right up until the age of retirement. And of course, we actually need cover in place right up until the point in which we pass away. So that's why it's incredibly important to still have separate cover of your own, not just relying on what we have at work, because there will come a point where you may leave work, even if you've worked there up until retirement, still need cover, and it becomes incredibly hard to get it. For the mothers as well, your work policy will not cover your children, okay? It will only cover yourself. So again, by having life or critical illness policy, you've actually got cover available for your dependents. So just a couple of questions that I know come up, and I'm sure you guys may have more questions, but just a couple of bits that I know many people ask is, do I get cover if I don't have any kids or property? So I've got no debt, I've got no dependents, it's just me living my best life. You still need cover because someone still has to be financially responsible for you if you pass away. Also, you still need cover because, again, if you was to get critically sick or you needed to take time off work, who is it then that's going to support you? Another common one is what happens if your provider goes bust or doesn't exist? Because I am FCA regulated, that means I work with providers who are supported by the FSCS, the Financial Compensation Scheme. So what that means that if anything happens to your provider, you're okay. If you are amidst the claim will be honoured by the FSCS. If you are currently paying for your premiums and a provider goes bust, then the FSCS will be able to transfer a policy or refund you all of your premiums that you may have paid. But I'll be very, very honest with you guys. I cannot see any provider going bust anytime soon. And I work with some of the best: Aviva, Scottish Widows, Legal & General, Zurich, Royal London, Guardian, 1821. These are some really amazing providers that are not just insurance providers, but are wealth management companies. So there's no chance of them going bust anytime soon. And then lastly, is business insurance absolutely necessary? So this is for all my self-employed entrepreneur directors. It is. It absolutely is, because of course your business is your livelihood. So if you don't have insurance for your livelihood, what does that mean? If you've got a business and you've got children, you want to pass that business on to them so they can inherit it. It means it needs protecting. Even from a really sort of low level, as we've seen with COVID-19, when I say low level, I mean in terms of value of the policy, the size of the policy, business insurance from a public or indemnity perspective, public liability or public indemnity perspective, is a really, really small policy, but great to have in place because it protects all of your property. It protects your staff. It protects your equipment. So again, you've worked incredibly hard to build this business. The next thing that you want to do is make sure that you can mitigate financial loss. We've got insurance for our phones. If we break our phone, we call the insurance provider so we don't have to put our hands in our pocket. We've got insurance for our home, or at least I hope many of us do. We've got insurance for our home. Something gets broken within the home, or there's a fire or a flood, God forbid, we call the insurance provider. If someone crashes into our car, again, what do? We call the insurance provider. So I will stop sharing my screen now and just check to see if we have any more questions that are coming in, and we'll just basically speak about, just in general, how speaking to an advisor is really, really beneficial, because I can understand in this day and age, in this digital day and age, many of us think, what do I need an advisor for? I can do it myself. I can go online. I can go on Google. But the problem is of course, you're not FCA regulated. So what that means is it's really, really sort of difficult to understand what is the most beneficial for you. So when you have a conversation with a financial advisor, and I'll talk you guys through the process so you can kind of know what to expect. You have a conversation, for example, with someone like myself. You get an introduction, sort of bit of history to understand who it is that you're speaking to. As I mentioned in the beginning, I'm a mum, I'm a property owner. And funny enough, I've actually probably been where a lot of us have also been. I've had to take time off work because I've been significantly ill. I've then, of course, had a child and needed to review my current policy that I originally had in place to make sure that it adequately protected him. So I've been in different scenarios where actually insurance has been really beneficial for me, and I didn't realize before coming into the role that I'm currently in. So again, you have a conversation with your advisor just to understand who they are. And when you do have a conversation with your advisor, you want it to be like a conversation, because you're going to be discussing things like your medical health history. You're going to be discussing things like your income. It's not an incredibly lengthy conversation, but it can be a little bit personal for some. So you want to know that the person who you're having a chat with, you're comfortable with. You want to have a chit chat. It's not necessarily your best friend, but you want to be able to have a conversation with them. And so by doing so, you strike up a rapport. If at that point you're not sort of comfortable with your advisor, that's absolutely okay. And I would genuinely recommend anyone to go elsewhere. Seek another advisor, okay? That's no problem at all if you don't necessarily take up cover with the initial advisor that you came across. But moving on from that, you then develop a conversation. The advisor will ascertain your needs and circumstances. Do you have debt that needs protecting? Do you have children that are financially dependent? How much are you earning? Have you been signed off sick before? Okay, so once we've ascertained that, we then run a quote to understand what is relevant for yourself. How I like to operate is I like to give you what is known as my recommendation. So as an advisor, I recommend for you this, which is a fully sort of bulletproof protection package, okay? Meaning that you are going to mitigate financial loss in any eventuality. Then the conversation relates back to you as the client to understand what is your budget. Your friend may be paying £20 a month for her insurance. Your dad may be paying £50 a month for his insurance. You are never going to be able to try and understand between their information what is best for you until you have a conversation with an advisor, because your cover is based on your needs and circumstances. I'm going to keep on saying it, your needs and circumstances. So therefore you pay what is relevant. But of course, your advisor will tailor that protection package to meet your budget. It's not the advisor paying for the cover, it is you. So your bank account has to appreciate the cover just as much as you do. And that means that it has to be affordable, it has to be maintainable. Because the one thing we don't want is for you to have cover in place, okay, and then you cancel. And the minute you cancel, something happens. You're either signed off work and you no longer have an income protection policy, or you cancel the policy and you then are unfortunately diagnosed with something. Or even worse, you then suddenly pass away. As an advisor, I have had genuine clients who have had cover put in place with myself after having cover put in place previously, and they've cancelled. And then there has been a scenario where they needed to take advantage of the cover and they haven't had it. Okay. So again, that's why it's so important to make sure that your cover is affordable. You can actually amend your cover at any stage. So if you're paying £30 today, you can actually bring your cover right down to £10 in the event that it becomes unaffordable, like COVID-19. How many of us have lost jobs, lost income, change of circumstances? So of course, the debt list changes, the budget list changes, the bills list changes, okay? That expense sheet now needs to sort of support the new lifestyle. That's absolutely fine. You can actually amend your cover. But it's always important to amend the cover rather than cancel, because of course you just don't want to be in a position which makes it incredibly harder to then get cover in the future. Which then kind of leads me on to those who are probably concerned about any pre-existing medical conditions. If you have been diagnosed with anything in the past, if you have been treated for anything in the past, there is cover available. So just in case there's anyone in the audience that is concerned that they may have been declined, I certainly work with a panel of providers that can still give you cover. Now, there may be particular clauses in your policy that may exclude a particular condition or illness that you suffered from in the past. But there is actually also cover available for those of you who want cover moving forward where it isn't excluded from your policy. So what will be put in place is a small exclusion for a period of time, not the entire length of the policy, just a period of time, allowing you to no longer have symptoms, treatment, medication, whatever that sort of road to recovery may look like, until you can go a period of time where you're no longer suffering, to then allow it to be included on your policy. And again, these are the benefits of having a conversation with an advisor, because of course, Go Compare is not going to tell you these things. Money Supermarket or Which.com, they're not going to provide you with this information. So if anyone does have any concerns of having cover put in place and, you know, they've either been declined or they know they've been treated for something significant or small, whatever it may be, and they're worried about how to get cover, just have a conversation. Cover is available for everyone. Okay. Now, moving on to sort of the last bit is, how do I now have a conversation with my loved ones or my partners about putting cover in place? So let's just say you're the advocate, you understand that you need cover, you've clicked the link in my bio on Instagram and booked a consultation, we've had a chat, we've put in place cover for you. Let me please note as well that with a consultation, anything that is discussed remains confidential. So if you do have medical history, discussing finances, it remains completely confidential, okay? Never be concerned about your advisor putting in place cover for both you and your partner and worried about disclosing information between the two. That sometimes can be a big concern, and I've had clients that want their information to remain private despite being married, and that is absolutely okay. Your medical history, your income and expenditure is personal and private to you, and so it remains confidential. We simply then pass the information over to the provider. You get a copy of all of the information that the provider has on file, and it goes no further. But it still means that your advisor is on hand. So if anything does come up in the future that you need to have a conversation about, I certainly always say to my clients, call me, WhatsApp me, email me, whatever it is, because you're not just an advisor for a moment or for an hour's consultation, you're an advisor for a lifetime. You know, you want to strike up that relationship where if circumstances do change, or you've been diagnosed with something, you now need to process a claim, you want to be able to call your advisor and say, hey, I don't want to deal with this right now, can you? Or like I said, you've broken a leg or something. Bearing in mind as well, guys, I'm not going to go too much into this, but there are additional benefits like fracture cover and stuff like that that can be built into your policy as well for the sort of minor things, but that we can take advantage of. But as I was saying, you know, you're going through the process of a claim. You don't want to deal with that. Call your advisor. They'll be able to handle that on your behalf. Direct debit changes, address changes, policy reductions or increases. Call your advisor. If anyone is thinking of having a joint policy and you don't have a joint mortgage, so you've had a chat with Bay, you've had a chat with your partner, and you know you both want to get cover now, and you're thinking of doing a joint policy, don't. The reason is because what a lot of people don't appreciate is with a joint policy, it's usually either or, okay? And what that means is whoever goes first, whoever is diagnosed with a critical illness first, or whoever may pass away first. Of course, if you've got a joint mortgage, that's fantastic, because what that means is that in the event of something happening to either of you, irrespective of who's first, the mortgage is cleared, meaning that the other one is then okay and doesn't have to continue with those mortgage payments. However, anything else, you can't have a joint income protection policy anyway, but anything else you want to have separate, because God forbid you both end up sick, there's only one payout, okay? And what does that mean for the both of you? However, if you are a family and you have cover, your partner has cover, your children are in a position to take advantage of the cover that you both have. So with every critical illness policy, there is cover available for the children. And again, if set up correctly as well. There is cover available for the children. In the event, God forbid, but in the event that any child needs to take advantage of a critical illness claim, they can take advantage of the mother's policy and the father's, just as a little FYI. And then the last one, like I was getting onto, that I just want to round up with, is leaving policies in trust. So for those of you who have done the amazing thing, you've already got cover in place, or you may already have a property, or you may already have savings in the bank, what we need to make sure is that these policies are left in trust. So remember that annoying term that I mentioned earlier, inheritance tax? By having a policy left in trust, what that means is that your loved ones who stand to inherit the policy avoid paying that 40% on that specific cover. Now I'll set the scene for you. You've got a property and it's valued at 400,000. Unfortunately, you have passed away. So there's now no mortgage. We've got a property worth £400,000. The inheritance tax threshold is 325,000. You then pay, or should I say your loved ones then pay 40% inheritance tax on everything above 325. Okay, so what we've actually got is 40% on 75k. That's a lot of money for someone who is standing to inherit a property or a business by no default, no means of their own. They're literally just there inheriting it, and then has to pay 40%. I'm not doing the maths in case anyone wants me to, but I'm not doing the maths. 40% on 75k. So by having a life insurance policy left in trust, you avoid that, because what happens is you avoid the probate, you avoid the valuing of your estate, and the life insurance policy just goes directly to the loved one because it's left in trust. So it's actually removed from the value of your estate. So again, to set the scenario, you've got a £100,000 life insurance policy. You've got the property valued at 400. The mortgage has paid it off. You know, someone now needs to pay the 40% on the 75,000, but they've now just received £100,000 because that life insurance policy was left in trust. That's theirs. That's their cash for them to use as they see fit. Whatever that inheritance tax bill now looks like, you've taken care of them because they can use that £100,000 to clear the inheritance tax bill without having to put any hand into their own pocket. Solicitors' fees, lawyers' fees, certificates, signatures, whatever that may look like, the money is there available to mitigate, again, financial loss. Is money the end all, be all and end all? It absolutely isn't. But we do live in a capitalist country, guys, where money provides us many opportunities and many different options. So the great thing is just making sure that you have that cash flow available. You know, money, insurance, should I say, gives you access to money that you didn't have to save for, that you didn't have to clear your debt for, that you didn't have to, you know, ruin your emergency fund for, your sinking funds. Go and ask the bank of mum and dad. Go and ask your family, your loved ones. Insurance literally mitigates financial loss and does all of the hard work for you. And this is why I also say that it's the underpinning of any financial literacy journey that you may be on. Because if you're on your financial literacy journey, guys, and what you're trying to do is become a better saver, become a better debt manager, become better at, you know, putting things in place, you kind of want to have your insurance in place first, because it takes time to learn all of those things. It takes time to build better habits, 28 days to be specific. But there can be a lot of damage done in 28 days. So by having your insurance in place, the underpinning of any financial journey, it mitigates problems before you've learned how to prevent those problems. Okay, so whilst we're on our journey of doing excellent things, budgeting, saving, etc., and we're learning how to put those in place, just in case anything happens beforehand, you've already got your insurance in place to take care of it. So again, that's why I genuinely believe, you know, all of us should have some form of cover in place, no matter how big or how small. Just have something put in place, again, that meets your needs and circumstances, and of course just protects loved ones and people around you. Okay, so I'll hand it back over to Mika now in case there's been any questions or if there's anything else that you guys specifically want me to cover. And then, of course, I'll be happy to answer.
Hey.
Hey.
Hi. That was really good. I'm really hoping that people have taken notes. I was sitting here taking everything. I was literally trying to Google the words as well because there were certain words. I was like, I don't know what it means. But first of all, before I actually go into all these questions, I was literally just listening, and you're so passionate about the industry that you're talking about. So how did you actually become an insurance financial advisor?
So it's so funny. So going back to, like I said, I got my property when I was 26 years old. And because my parents knew about insurance, it was actually something that I was already aware of. And I know not a lot of us are. I was really fortunate where it was a sort of something in the back of my head, got my property, should get cover for the mortgage. Yeah. And it was only until I had my son that it kind of dawned me, and I was thinking, there's got to be more to this. Had no understanding, got to be more to this. And then funny enough, on social media, I actually saw someone who I was familiar with, didn't actually know, but was familiar with. And she said, oh, I'm reviewing your life insurance policy. And I was like, oh, wait, there's people that do this? Because I did the same thing that so many other people do. I just went online, in legal in general, had a policy. It's only until now I know how ridiculous that policy was. I thought I had my mortgage. I thought what I had was really affordable. It was rubbish. It was honestly rubbish. So yeah, had a chat with this girl who is actually now my colleague. She completely reviewed my policy, put better cover in place, and I was just stunned. I was like, I didn't know people did this. How do I get involved? I'd been in marketing before, so I'd always kind of been in a client-facing role. But yeah, I was completely stunned, and she was like, well, yeah, sure, you know, join the team, you know, if you want to get involved. So I went on training, 2 weeks then induction, built up experience, and then I just hit the road running. And because I have lost family members, and I've seen how many women, how many people in general just don't really know. Yeah. I'm your advocate. I'm like, no, guys, let's learn about insurance. It's not
so important.
Topic, but if it's a conversation, then it can be a lot easier to digest.
Yeah, and I think it's so important because obviously with COVID happening, and I feel like a lot of us have lost people during this season of COVID. And I think because it's been so unexpected, you know, we're seeing a lot of GoFundMes online, you know, trying to raise money for funerals and stuff like that. So hearing stuff like this, like life insurance is very, very important. I've even had this conversation with my mum before, and I think it's a very hard conversation to have because you really don't know when the time is. So, you know, to take out something like that, it kind of just gets you a bit on edge. But I think if you have people who are able to kind of clearly or succinctly give you the explanation of what life insurance is, then it'll make it more easy, especially in our generation or our demographic, whatever kind of where you come from is very, very important. So thank you so much for that. I learned a lot today. I'm definitely going to be having a conversation with a few people, mum and dad. So we have a question from Tobi. So Tobi says, when is the best time to get cover? Do you need to apply before you start work? And can you get it if you already have an illness?
Okay, so the best time to get cover, in all honesty, is when we turn 18, because that is actually the earliest that you can get cover. Some providers it is actually 16, but that's very, very minimal, so I say 18. The reason is because the cover that you get at age 18 is peanuts compared to the cover that you may then put in place when you're 30, 40, 50.
Right.
So it's really, really, really affordable. And of course, like I said, we're always going to need insurance at some point. When in relation to work, you can then put in place the cover once you've already started work. That is absolutely fine. And of course, if you swap and change roles as you go along, you can simply just amend the cover to make sure that the payout is still right, the income protection that is paid out is still relevant and adequate, or that, of course, that the occupation that they're covering you for is still accurate. So you can definitely put that in place after you've started working or before going into a new role. And can you get cover if you already have an illness? You absolutely can. There's cover available for everyone. Not a lot of people realize, and especially in certain communities, like for example, the black community, where, you know, sickle cell is actually something that's quite common, and a lot of people, you know, they're deterred thinking that they can't get cover. You actually can. It's just a case of having a conversation. For example, like with someone like myself who's got access to a load of different providers that can then put it in place for you. So yeah, you absolutely can.
Great. And the next question is from Anita. Anita is asking how to secure the right policy with a transparent premium increase. What do we need to look for?
Okay, so to secure the right policy, have a chat with me because I can certainly help you. With a transparent premium increase, now what you can get is two types of policies. You can either get a guaranteed level policy or an indexed policy. When a policy is guaranteed, it means that the premiums that you are paying at the inception of the policy, so the very beginning, we've had a chat and I've told you it's going to be £30 a month, they stay the same until the policy comes to an end. Or with some policies that last a lifetime, right until the very end. That will then never increase. No one is going to write to you and say, hey, you're a year older, we're going to increase your premiums. Or, you know, like with our phone bill we get each year, oh, the index price increase, we're going to increase your policy by £3. No, nothing at all. It will stay exactly the same. When you have a policy that is indexed, it means that your policy increases with the rate of inflation. Because, of course, with something like cover that you've put in place to sort of mitigate funerals, what £5,000 can buy you today, it obviously can't buy you in 20 years' time. So you have a policy that increases with the rate of inflation, meaning that the value of your policy remains the same. So it may have increased to 10,000 because 10,000 is actually what you need in 20 years' time, not just the 5. But of course, if anyone has an indexation on their policy, it means that it's going to increase. And what you have to take into consideration is how affordable is this going to be for me long term? Usually when you get an index policy, it starts off really cheap. But that's because in 20 years' time, chances are it's going to be really expensive. So if you've got a policy that's indexed and you want it reviewed, then maybe putting it in place of guaranteed policy might be better. And then also, I would definitely say when you have a conversation with an advisor, they should be able to actually put in place relevant cover for you where you wouldn't necessarily need an index policy. You're more taking an index policy from choice because you know you've got the budget rather than because you think that that's the better option.
Yeah. Thank you so much for that. And then lastly, we have Jennifer who asks, what are the highlights and not so great parts of working in your industry?
Okay, so I am actually part of an amazing team. So the highlights is definitely colleagues, motivation, and the sort of education part for me. It's a self-employed role, which means that I source my own clients, which is why I've got like a social media page to obviously give people a bit more information and attract them towards me, or doing events like this where, of course, I can reach a greater audience. So that, for me, definitely working alongside like-minded individuals and being able to educate people along the way. In all honesty, the not so great parts is hearing people's backstories. You know, hearing people losing people to COVID, hearing people be in financial disarray because their father had a policy and cancelled it 3 months and then passed away from a heart attack. And these are case studies that I've had. You know, having those conversations with the client where you do have to go through their medical history and, you know, they may have been diagnosed with something that is really unfortunate. And funny enough, that is actually the harder bit than it is the claim process, because the claim process is awful because it means someone's been diagnosed with something or they're signed off work. But there's kind of light at the end of the tunnel because of the providers that I work with. I know that the claim process for the client is going to be seamless.
Yeah.
And it's going to be really easy in order for them to retrieve the lump sum payout that is owed to them. So that's actually not the hardest bit. It's just that conversation where there has been a backstory without having cover and navigate that.
Amazing. Thank you for sharing that with us. Honestly, I'm just loving the energy that you're giving, because you know what? I've realized that when it comes down to talking about insurance or finances, we find it very difficult. And that's something that even me, I'm getting used to speaking about finances more often, because again, if we don't actually talk or have a conversation about it, how do we better these things? So thank you so much for sharing your wisdom with us. If you could give us, let's say, 3 tips on how you can better improve your financial status.
Okay, so definitely number 1 would be to create a list of expenses. Go old school, write it down on piece of paper, get an Excel spreadsheet, but get a great understanding of your expenses. Go through your bank account from the last 2 to 3 months, not just last month, because some subscriptions and things like that can differ. Go back and make a list of everything that seems to be coming out of your account on a regular basis, so you know exactly where you are. Get a good understanding of your financial situation. The second thing is then to review those direct debits and subscriptions. There are so many subscriptions that Apple have stolen from me through my bank account because I've signed up for something and I'm like, hey, So definitely go and review those, because you can then save so much money. This will then, of course, help to increase your sort of financial picture of where you are. Understand goals and tips on what you want. And then, of course, like I said, put in place some insurance with whatever small disposable income you may have. My rule of thumb is always staying within a 10% range. So, for example, if you've got £300 disposable, I'm never going to put in place any policy that's going to exceed £30, because I'm just not trying to spend all of your money for you. But again, like I said, it's a great way to protect the savings, the emergency funds, so you can take time to build up that hard work without any sort of catastrophe coming along and undoing it all for you.
Yeah. Thank you so much again, Ella, for sharing with us. It's an honor, and I know that if people haven't seen this, they can also go back, or if there's something that Ella might have said that you didn't quite catch at the time, make sure you go back, re-watch it, share, like, comment, tell us what you liked about it, and then make sure you follow Ella as well. Did you give us your socials?
So my socials is Ella_Ensures on every platform. You can catch me there. And if anyone does want to see any other content or book a consultation, if you literally just click the link in my bio, there's the option to book a consultation there. It will come directly through to me, and it will just be a conversation to understand your needs and circumstances.
Great, thank you so much. So please make sure you follow her, go and see her, fix your finances, get your life insurance, just fix your life. Yeah,
fix your life. I like that.
Just fix your life. Fix your life. That's what we're going to start with. So thank you so much again, Ella. This was the financial workshop, or the finance workshop. Again, if you didn't catch anything that Ella said, or you came late, please make sure you go back, replay, and take notes and book with her. I am Mika. I will be seeing you guys very, very soon. We're coming to a close, but make sure you stay tuned in to the day today, because we have another special panel that's going to be coming up later on during the day, and I don't think you'd want to miss that. So please make sure you stay tuned into the WOTC Now Summit. Thank you so much for joining us today. And again, thank you, Ella.